everyone for joining me today. My name is Trisha Thomas. I'm a partner here at Fourlane. Today, we're going to talk about the month-end close process and what we recommend doing with our clients when it comes to closing out those books every month. So I'm going to kind of go over with you, what is the month-end close process? What does that mean to close out your books every month? We're going to talk about some reports that you should be reviewing as part of your month-end close. I'm going to actually go over our recommended process and kind of show you high level how we train clients and do this for our clients. And then, of course, we're always going to look at reporting. So when a client asks me, what is the month-end close process? What I explain to them is this should be a document structure, kind of like a checklist. So your accounting procedures that your business should be performing, recommended at the end of each month to ensure that financial records are accurate, complete, and up to date. Now, sometimes I have clients that they only close and review once a quarter. What we want to get away from is clients that only close out their books once a year. You think about how hard that is you do something in January, and then December of that year, or even January the next year, you have to remember what you did, what was going on, to make a decision about what you need to do with the transaction in question. It's a lot easier if we look at the current period, we know what happened, we can make better business decisions on any changes that might be needed by doing a monthly close. Okay, so this is a key part of the financial reporting cycle, and it's critical to be able to make those informed business decisions. Got to have that good data. Okay, so purpose of closing out month-end close, our goals are, again, we want to make sure all transactions are in the file and they're recorded accurately. So we're verifying the completeness of transactions, the accuracy. We're reconciling our balance sheet accounts. So this allows us to catch any kind of discrepancies. And of course, from there, we can prepare our internal reports for our leadership or external stakeholders. Okay, this is also going to help us better manage our cash flow. So when you think about reconciling your accounts, reviewing your open AR, reviewing your open AP, making sure you have your credit card transactions in the file, this is allowing you to get a clear picture of what you have available in cash, what you're anticipating in shortfalls or surpluses. So that way, do we need to maybe reach out and create payment plans? Or maybe this is time to start investing. So this is going to help you improve your working capital efficiency by having these tight controls over collections, over disbursements, and knowing what's going on with our books. Okay, so I'm going to hop over to my sample file and we're going to talk about looking at our reports and kind of what the process looks at, and then I'll go through the close process itself. So let me minimize this guy. So thinking about the month-end close process, these are the things that we want to look at. I always say this is kind of our pre-work before we close out the book. So before we can actually go through and review, reconcile, do all the things that we should be doing every month, we need to do this pre-work on the front end. So of course, we want to make sure on the accounts receivable side of things that we've got looking at our income tracker, that we've got all of our invoices that should be created in this period recorded. We want to make sure that our income and cost are accurate. We want to make sure that all of our customer payments are posted, but not only are they posted, this is something that clients sometimes forget, but we do the next step of actually recording the deposit in our bank accounts. So for example, these transactions here, we've posted them as paid as a customer payment, but we haven't actually allocated them to the bank. They're sitting in our undeposited funds saying, when did we deposit them? We want to make sure that we always do that step, because again, we're looking for the accuracy of the cash that's in our bank. And if we forget this step, we're going to be off when we go to reconcile. Okay, same thing on our vendor side. We want to make sure that we have entered every bill. We have received all inventory. we want to make sure what happens in the period is recorded in the period. That way, again, we have true assets for that inventory. We have true liabilities for any bills due. And then we want to make sure if we did pay any bills, we actually did record those payments. So again, the accuracy of what is open, what liability we owe. We also want to make sure some people, when it comes to bank fees, they don't do this every week. They'll do it once a month. So part of your month end close, if we do not do bank fees every week, that we do make sure it is for end of the month. So for example, we've got 7 transactions sitting that we need to record in this file. Now, not all clients do bank feeds. If you guys don't do bank feeds, that's not a, problem. That's not saying, hey, this is something we should be doing. The bank feed features allow you to connect to your bank account so that we have what clears the banks, flows into our accounting file, but it is not something that is required. It just streamlines your process. And again, if we have an issue concerned with cash, this would allow us to always match our bank accounts. Okay. Last but not least, let me close this guy out, is coming in here and entering our journal entries. So any journal entries that need to be posted, so it could be for possible accruals. It could be if we're doing deferred revenue, making sure we have allocated the income for the period. Our depreciation on our assets. A lot of clients do it monthly. Some only do it annually. Again, that's not a right or wrong answer. And then, of course, if we're doing any prepaid expenses. Now, when it comes to journal entries, QuickBooks does have a great feature called Memorize Transactions List. So you can create these journal entries that you create every month, and you can set them up as Memorize and have those go ahead and post for you to make sure they're done. Okay, so again, kind of our pre-work, making sure all journal entries are posted, making sure our AR functions are complete, our AP functions are complete, everything is there. And of course, we want to, if we're tracking inventory, we want to make sure our inventory is accurate. So we want to do a count. Some people just do a cycle count. So a cycle count, that's going to try to log me in, will allow you to choose certain items to do a count on. Some people will, if they have a big inventory and it doesn't make sense for them to count everything every single month, they'll pick some big ticket asset items and reconcile that way. Or maybe they do a group. So that category feature that we have in QuickBooks, we can do an inventory account by that. So what we're looking for is, again, what's in our warehouse is reflected in our accounting file. We're using our accounting file to make our business decisions, so the data has to be accurate. Okay? So coming on after that, we say, okay, we've confirmed, we have closed out, we have entered all of our transactions, we are now ready to start the month-end close process. Okay, so kind of 2 main reports that you're going to start with. I always start with my balance sheet. I use my balance sheet as my guide. And the reason why I do this is because changes or anything that we are possibly missing on our balance sheet is going to affect our profit and loss. So to me, it just makes sense. Let's start here. Okay, I like to export the balance sheet in Excel, and that way I can enter information about what I've completed, what I'm waiting for, what's in progress. That's not something that you have to do. You can make comments in your accounting file. That's just for me. I do like to have my Excel spreadsheet to start my month-end close. Okay, so the goal would be, I'm going to move this guy to my month-end. The goal would be is what we're looking at is to make sure these balance are accurate according to our balance sheet. And so from here, we're going to use our supporting documentation to verify that balance. So when it comes to our checking and savings accounts and our credit card accounts, our document that's going to be our supporting document that reviews the balance and make sure it's accurate is our statements. So we're going to go through the process of reconciling and using that statement to say, here's what the statement ending balance is, and I want to make sure my QuickBooks matches it. This allows us to make sure we have not miss any deposits or any expenses that we did throughout the month. And I'm going to show you the reconcile process because I want you guys to see we take it a step further and actually train clients on reconciling all balance sheet accounts. So I want to show you that. Okay, so coming on down, we've got statements to support these balances. Our accounts receivable, the goal is to review it, to identify any cleanup that might be needed. So we're going to run, and you can see that you have the summary or the detail. Summary is going to give me all transaction totals for a customer. Detail is going to list out every single invoice and credit that a customer has. So whatever one you prefer to look at, for this instance, I'm just going to use the summary because I'm trying to keep it kind of higher level for you guys. So what we're looking at is I always start at the total. I'm looking to make sure I have no zeros sitting out here in a total. That tells me that I have a debit and a credit, or an invoice and a credit, an invoice and a payment, and they have not been linked together to offset. So they're both sitting outstanding. The next thing I'm going to do is I'm going to look at my two buckets for anything over 60 days. What I'm looking for is there anything that I need to have my team reach out on to collect, or is there stuff to be written off, uncollectible revenue? So for example, this guy right here, this is a big balance sitting here under Doug. I'm going to question, why is this sitting out here over 90 days and we haven't collected anything? So this is where, again, I can export it to Excel, or I can actually create that common end report inside of QuickBooks. Here's a feature right here. So that way I can send this to my AR team member and give them direction on what I want them to do when it comes to these balances. Okay, so coming back to my balance sheet, we're going to come on down. We've got our undeposited funds. So again, the hope would be the only thing sitting in this account is anything that we have not yet deposited in the bank. It's the holding account for our bank deposits. Okay, for our inventory asset, what we're going to be looking for is our detailed inventory report. These two things should always tie together. They support the balances for each other. So we're going to come here and we're going to come down to inventory and we're going to run the inventory valuation summary. You can run it by site. I'm just running it at summary level because I want to see what my total is for all my sites. So I'm going to come in here. I always choose this button to say hide zero quantity, so that way it's not so big. So if you have a lot of inventory items, but you don't have quantity, by checking this, they will remove them on the report. Okay, so what I'm looking at here is my asset total. Does it match what my balance sheet shows for the same date range? And I'm also checking to make sure I have no negative inventory. If I have negative inventory, that's kind of my stopping point to say, hey, inventory team, I need you to go review this item in the warehouse. It could be I need you to do a count, or it could also be to identify why it's negative, because that tells us there's a gap in our process that caused this negative inventory. So it's not just we want to fix it, but we want to understand the why so we can course correct in the training aspect of the workflow to make sure we do not have negative inventory in our database. Okay, back to my balance sheet. So again, I'm just coming down, and these are all the things that I'm reviewing. Is this accurate? Is this accurate? So, and I'm going to go in and show you the detailed reports we're going to drive into and look at everything. Okay, that's going to be that reconciliation process I'm going to show you. Not a lot of change in our fixed assets most of the time. What we're looking for is the movement of our depreciation if we do it monthly. And coming down on the liability side is the same thing. We're going to look at accounts payable. We're going to make sure that we didn't miss a bill. There's nothing sitting out here in one of those buckets that we need to clean up. If we have a credit, maybe we're no longer working with that vendor. And so we want to call and say, hey, we want to check for that credit we have on our account. So making sure that this balance is accurate. Credit cards, we're going to use our statement accounts that we have. And then coming on down, you've got your payroll liabilities. So if you're using an outside payroll service, you can verify that this is accurate using that. The same with our loans. We have a statement on that loan, and we want to make sure that our liability is accurate. Sometimes we see that clients will post when they're making the payment and they post the full payment to principal instead of separating principal and interest. So by taking that statement, we can verify this is actually what we owe as a company. We want to know what we have in our liabilities. Okay, so let's go through the reconciliation process, and then I'm going to talk about what I look at on the profit and loss. Okay, so back to my home screen. You can get to reconciling a couple of places. If you like up here, you can get it here. I love my home screen, so I always start from there. So I'm going to choose the reconcile button. Now, here's the key thing I tell clients. You see here, you don't just have your statement accounts, you have every balance sheet account. And that's because QuickBooks is set up that we can reconcile all of our accounts. So we know when we reconcile a statement account, we're choosing the account, we're choosing what the ending balance is per that statement, entering any fees or interest, and then what comes up, of course, I choose an account that doesn't have anything in it. Let me pick a different one. Let's choose our checking. And then what we're going to do is use the statement, and we're going to select all deposits and all expenses. So that way that at the end, there should be a zero difference. It should tie to our statement. Okay, so that's statement reconciling. So I'm going to leave out of here. Now what I want to show you guys is non-statement accounts, how we go about reconciling. So coming on down, I'm going to use, for example, the employee advance account. And I'm going to hop in here, but I'm going to come back to my balance sheet before I do that. So when we think of employee advances, or really any non-statement account, and we talk about reconciling those, the purpose of it is we know that our ending balance as of 12/31 was $500. But depending on how often you give out employee advances, or in the case of customer deposits, deferred revenue, there can be a lot of ins and outs, a lot of activity, a lot of debits and credits. The purpose of reconciling is so that we see what's outstanding only. We don't want to see all the noise. So for example, if I show you prepayments, we run the whole thing, there's a lot in here. There's a lot in here that we would have to sort through to figure out, well, what really makes up this $106,000 balance? So by reconciling these accounts, we can remove the noise and we can see what is just outstanding. So again, goal being to support the balance, a detailed report that will support our balance sheet balance. So I'm going to come in here and I'm going to reconcile, and I'm going to do a couple of them so that I can show you guys. So first I'm going to choose the employee advances. Now, here's the biggest difference. When you choose the date you're going to reconcile and you choose your ending balance, the ending balance will always be zero. The reason for this is because we're not trying to tie to a beginning or ending balance that is an actual value. We're trying to remove all offsetting entry. So all debits that have a matching offset credit. Okay, so coming through here, you can see here that you've got money going out and money coming in. You can customize. So if you want to see something different, you can add information here to make it easier for you to reconcile. You can actually change order. So if I like to see payee on top, I can make a match. I can, by just selecting the gray header, I can change whatever information I want. I'm going to do, for this instance, payee. And again, what I'm looking for is matching debits and credits. This is a great little feature here. This, for all statements, all reconciling statement and non, it will hide the transactions that are created after the statement date. This is very important if you kind of have the same amounts a lot. you don't want to see anything that was created after 12/31/2026 in this case. So I'm going to choose that. And now what I'm looking for is I see I have Dan Miller here for $450 and I have Dan Miller here for $450. So they match each other. So I'm going to go through and I'm going to select everything that matches each other. So here, Elizabeth got $320. And then here's where she's been paying it back. So we have 200 and we have 150. Now, if I chose the next one, that's going to take me out of balance. My balance difference is at 0. So that tells me those don't match. So I'm going to do the same thing here. We've got TTE2 here, and she got an employee advance of $1,500, and then she's paid it back every month. Okay, so again, goal is our difference is always 0. And we're removing the noise. So now I'm going to show you guys, I'm going to hit reconcile now, same exact process. It's always done. I'm going to close this. And now I'm going to go back to my account. And so here it was before, a lot of noise. And now I can say, I want you to show me only unclear. And I can say total by employee. Oh. And now what you're left with is that what made up the $500 balance, you can see that it's only left what's open. What's good about this is because if you look here on Elizabeth, we took an extra $250 out of her check. She didn't know it. She had already paid it back in full. So this is that audit process to allow us to make sure every month we've recorded what we should, and there's nothing outstanding or inaccurate that we want to make the change for. Okay, so I'm going to do one more. I'm going to do this guy. So the first time you do, for example, your prepaid insurance, you're going to see a lot. But what's great is I can see I hit 0 here. I hit 0 here. So the first time when I reconcile to get rid of all the extra noise, I'm going to reconcile it as of 11/30/2026 because I can see I hit 0 then. So I don't have to select each one. I'm going to do a mass. So I'm going to choose that account. That's my prepaid insurance. And I'm going to say as of 11/30/26. I'm going to say 0. It's always going to be 0 for an ending balance. I'm going to select the button to hide any transaction after that. Now I can mark all because I saw on my detailed report as of 11/30, everything hit 0. So I didn't have to go select check, check, check. I could select all and I can see my difference is 0. So I know I'm good. Now I'm going to take you back to that report. And I'm going to do the same thing we did to say, show me only what's open. No. And look how much better that report looks. Now I can see more of a report that I can look at to see what makes up that balance of $106,000. This is my supporting documentation to my balance sheet. Okay. So that's just kind of high level what we do, why we reconcile, what you're going to gain out of that. So kind of now what I do, once I've gone through my balance sheet, I've reconciled all these accounts, I've made sure my balances are accurate, I'm now going to run my profit and loss. If you've got profit and loss by class, you want to run that first because again, we're looking for the accuracy. We're looking to make sure that it is coded where it should go. In this case, we have balances in our unclassified. So that would be step 1, reclassify these transactions to the correct class. And then step 2, I want to look at trends. I want to make sure we're doing how I would expect that we would do as a business. So I always like to look at last few months because I want to compare. I want to make sure that we are consistent and we are doing what we should as a business. Those decisions, are where we said we wanted to grow in. We're seeing the growth. we're seeing the consistency. When I look at December, this is going to be a big red flag. It's not consistent. What happened? What happened in November? So this is going to allow me to look at it every month and not wait till year end and say, what happened to us as a business? Okay, so reports that we want to be looking at is our profit and loss. I like to do the last 3 months. Our budgets, we want to see budgets versus actuals. Our cash flow reporting. All of these reports, when we are done closing out our books, are going to give us the data we need to make the business decisions on what we do as a business. Okay, I know we're right at time. So thank you guys so much for joining me today. Have a good rest of your week, and I will see you next week.